President-elect Donald Trump's proposal to cap credit card interest rates at 10% has drawn support from progressives like Senator Bernie Sanders and Elizabeth Warren, but some experts warn that that cap could come with a big catch, potentially making it much harder for consumers to qualify for credit cards or access lines of credit.
Association to this new proposal from former President Trump last night, in which he said he wants to put a cap, as you say, on the interest rates that credit card companies can charge to consumers. Here's what the former president said at a rally last night.
While working Americans catch up, we're going to put a temporary cap on credit card interest rates. We're going to cap it at around 10%. We can't let them make 25 and 30%.
Today we are talking about a news story that is getting a lot of attention across the United States. It is about money, banks, credit cards, and a proposal made by Donald Trump that could affect millions of people. Even if you do not live in the US, this story is important because it shows how governments try to control big financial systems and help ordinary people. So let's start very simply. In America, many people use credit cards for daily life. They use credit cards to buy food, pay bills, shop online, or handle emergencies. A credit card lets you borrow money from a bank and pay it back later. But there is a catch. If you do not pay the full amount on time, the bank charges you interest. This interest can be very high. Right now, credit card interest rates in the US can go above 20%, sometimes even close to 30%. That means if someone borrows $1,000 and cannot pay it back quickly, they may end up paying hundreds of dollars extra just in interest. For many families, this becomes a serious problem. Now imagine a person who is already struggling with rent, food prices, medical bills, and education costs. When interest keeps adding up, debt grows faster and faster. This is how many people fall into a debt trap. They keep paying, but the total amount never seems to go down. When prices are already high, charging extreme interest is unfair. People are not borrowing money for luxury. They are borrowing to survive. So the government stepping in, even for 1 year, can give people time to breathe. Some supporters also argue that 10% interest is still profitable for banks. It is not zero. Banks will still earn money, just not as much as before. They believe this move can restore trust between people and the financial system. But now let's look at the other side. Critics of this proposal are very loud and very serious. Banks and financial experts warn that this plan could have negative effects. They say that if banks cannot charge higher interest, they may stop giving credit cards to people with low income or weak credit history. In simple words, banks might say, "This person is risky, so we will not lend to them at all." That means some people could lose access to credit completely. And for many Americans, credit cards are their last option during emergencies. Some experts also say that banks could increase other fees to make up for the lost interest. They might raise annual fees, late fees, or penalty charges. So while interest looks lower, the overall cost may not change much. Another argument is about the economy. Critics say that government control over interest rates can disturb the financial market. Banks operate based on risk and profit. If rules are too strict, it could reduce investment and slow down economic activity. There is also a political angle to this story. Donald Trump is known for bold statements and strong messaging. Some people believe this proposal is aimed at winning public support, especially from middle-class and working-class voters. Credit card debt is a very emotional issue, so talking about it creates strong reactions. For many ordinary Americans, this is not about politics. It is about monthly bills. It is about sleeping peacefully at night. It is about not being afraid to check bank statements. That is why this news is spreading so fast and creating so much engagement. Social media is full of opinions. Some people share personal stories about how interest destroyed their finances. Others warn that government interference can create bigger problems later. Both sides believe they are right. What makes this story perfect for an explanatory video is that it connects money, politics, and real life. Everyone understands debt. Everyone understands stress. and everyone wants a fair system. The future of this proposal is still unclear. It may change, it may be rejected, it may be delayed, but the conversation it has started will not disappear easily. Even if the interest cap does not become law, it has already forced banks, politicians, and citizens to talk openly about a system that many people feel is broken. So the real question is not just about 10% interest. The real question is how much control people should have over their financial lives and how much power large institutions should hold. This is why this news matters. This is why people are paying attention. And this is why it is one of the most engaging and impactful stories in the United States right now.